Hi, I'm Mark Mancini with VRBO Outstanding and Vacation Home Mastery. This weekend's episode is about depreciation and cost segregation studies, so stay tuned. And welcome back. Now, first I want to preface this with this is not any legal or tax advice. This is just some information that you can use for educational purposes to help you make better decisions about home ownership with vacation rentals and better tax planning. So let's start off with what is depreciation, okay? So when you buy a home, you've got a period of time where you can write the cost of that home off over time. Now, typically, a home is depreciated over 27.5 years. So let's use round numbers, okay? A $275,000 house would depreciate $10,000 a year. So you do this to offset your taxes because the house depreciates. You don't spend $275,000 on a house, right? And that's it from year one, okay? It's over the course of its life, you get to deduct $10,000 if it's a $275,000 house per year. Now, granted, if it's twice that, you get 20, 3 times 30, etc. Now, that helps offset your taxes, okay? So when you rent it out for, let's just say, and you get $100,000 a year in income, and all of your other costs maybe were $50,000 a year, you've got $50,000 profit. The depreciation helps offset your taxes, okay? And that's where depreciation comes in your favor. Now, let's look at another situation. Most of you have already owned your homes for a couple of years, and if you have, that's fine. Just stay in the situation you're on, and you're in good shape. The information we're going to talk about with the cost segregation study is for those of you who maybe in the first year of your home ownership or maybe looking at additional homes, whether it be long-term or short-term rentals, and you want to go ahead and plan for things, okay? You should always plan on your taxes first. Your biggest expense, your entire life, taxes, all right? So you want to mitigate your taxes. We always preach tax avoidance, okay? We don't teach tax evasion, okay? Tax evasion is illegal, okay? That's when you don't pay taxes you're legally obliged to. Tax avoidance is not paying taxes because you found loopholes and deductions to help offset and save you that money, okay? So, depreciation is what most of you are doing, straight line depreciation. But let's just say you're looking at another short-term rental. You're looking to expand your portfolio. Maybe you're looking for a long-term rental and expand your portfolio. Let's hypothetically say you're using money for the down payment of this house by selling some stock that you've owned for years. Let's just say you've had IBM stock since 1990 and it's gone up exponentially. And it started off maybe as $1,000 or $2,000, and now it's maybe $50,000 or $60,000, and you want to cash out that stock and buy another short-term rental. That's a great idea. But remember, when you go ahead and sell that stock, you're going to be paying taxes on that, okay? Now, you don't want to pay taxes if you can avoid it. All right, now let's talk about tax avoidance, not tax evasion. We don't want to pay taxes on that net gain where you started at $1,000 or $2,000 and you sold it for $50 or $60. That's a very big gain. Let's just hypothetically say $55,000 gain. Okay, paying taxes on that, you're going to run into, at least $10,000 in federal taxes. Okay, plus maybe some other taxes with state and other things as well. Your financial planner and CPA can tell you about that. Now, the benefit of a cost segregation study is that it offsets some of the things and kind of front loads your depreciation. So think about things this way. When you have a house, okay, Your AC does not last 27 and a half years, does it? Your roof does not last 27 and a half years, does it? No. Okay, and there are some other things too that depreciate because you have to replace them multiple times in the 27 and a half years. So what we're going to do is we're going to front load that depreciation. So a cost segregation study can easily be done by a qualified CPA. And we've done a couple of videos with Ron KELM. Ron can easily do a cost segregation study. My CPA is a different firm. They did my cost segregation study for me. And what they do is they look and they divide the different aspects of the home. They don't need to be on site at the home. In fact, they don't even really need to see the home. They just need to know the basics. And for the most part, they're going to look at AC units, maybe electrical, roofing, etc. Anything that is going to be replaced at least one time in 27 and a half years, which with most houses, there's several things that are going to be replaced. Now, what they're going to do is they're going to say, okay, use that example, $275,000 house, which you were going to depreciate $10,000 a year. We want to offset those $50,000 in capital gains taxes from when you sold that stock to put your down payment on your next short-term rental. So they're going to do a cost segregation study, and I'm just going to make up some numbers here. I'm just going to spitball some, so don't take me at my word. They may look at the cost segregation study and they say, okay, we're going to depreciate $50,000 the first year, $20,000 the second year, and then evenly disperse over the next 26 years or 25 years. So what they're doing is taking a big portion of it. They're offsetting the depreciation because of those things that are going to be replaced by you throughout the course of you owning that home. Okay? Now, let's just say they depreciated $50,000. You had a $50,000 capital gains tax on the taxes, okay? So that increased amount from $10,000 to $50,000 on depreciation is going to help offset your taxes so that when you buy that short-term rental the first year and you sold those stocks, you're not getting hit with a big tax burden. Instead, you're going to have those burdens offset, and therefore, you should be able to get through that first year purchase pretty well, and then you'll be able to disperse the next several years, or 27 and a half years, or however long you plan to own the house, evenly when you depreciate it. So the benefit of a cost segregation study is that purpose, is how you got that money for that down payment. Because most people, let's face it, all right, they don't have $50,000, $60,000 sitting in an account. They can just pull out and use for a down payment. They're getting this because maybe they're borrowing against their stocks. Maybe they're not even selling their stocks. They're doing what's called a margin loan against the stock. Okay. They may be selling another piece of property. They may be selling some other investment. Maybe it's a high-end piece of art. Any other type of investment, if there is a capital gain from that, you're going to be taxed on it. The great thing is that now that capital gain tax that you are now facing will be offset by simply doing a cost segregation study. Now, don't let people tell you that, oh, they cost, several $1,000s. They're not worth it if it's a $200,000 house or whatever. Look, you should not be paying $5,000 or several $1,000s for a cost segregation study. If you have a good CPA, they should be able to kind of roll this in their fee. They might charge you a little bit for this, but honestly, if you're using your CPA properly, and we talk about this in my other videos. Now remember, I also have our magnum opus course, VRB Outstanding, at VRBOutstanding.com. Goes over 8 hours of training on everything you need to know from getting your first home to managing it fully, plus my Vacation Home Mastery, which is a 2-hour mini course simply designed for you to get more money quickly by getting more bookings with direct bookings, and I will show you how to market it. And that's money. You're going to get your money's worth or your money back if you're not happy. Okay. It's $197. I know you have that money sitting around in your drawer. Just pull it out, spend the money, because you're going to get several $1,000s in bookings from it. Just do it. Okay. Get a direct book site. All right. I'm going to show you how to do that without wasting money, without wasting time, and without taking risks. Now, let's go back to that cost segregation study in your CPA. Your CPA, you should be meeting with that CPA every single quarter. Okay. We also talked about in the previous episode, financial planners. Your CPA and your financial planner should both be part of what we call your professional team. You should meet with both of them every quarter. Okay. Sometimes I'll meet with my financial planner once a month, and we'll discuss strategies and tax avoidance principles. Maybe I'm buying a vehicle. Okay. And of course, you always want to buy a truck that's over a certain weight limit so that you can get the accelerated depreciation. If you're making a lot of money, if you have a lot of bookings that year, you want to offset your taxes. There's some great things. And guess what? I finally got my email from my Cybertruck, my Tesla Cybertruck, and I decided to wait. I'm not going to be the first one to get it with a dual motor. I'm waiting till the second half of 2024. I'm getting the Cyber Beast, the 3-motor, 0 to 60 in 2.9 seconds. So I'm going to have to wait a few months longer, but I'd rather wait and get the truck I want. And before I went ahead and did that, guess what I did? I reached out to my CPA and I asked him, which LLC should I put this under? And how should I make payments for it, etc. So when I went ahead and got the email from Tesla, I went onto the app like we're supposed to do and said, okay, I'm going to register in this company name, and here's what I'm going to pay for it. And they said, okay, we'll reach out to you when the time comes. I know I've got a few months to wait, about 5 months, but that's okay. All right. But that is why you have a good CPA. When you make any decision like that, always run it by them. Now, when you go to buy a second short-term rental or third or fourth or fifth, you always reach out to your CPA and say, I'm thinking about selling my IBM stock I had since I was a kid. My father got it for me. It's got $50,000 in appreciated unrealized income. I want to sell it, realize the income. I'll be paying capital gains taxes on it. But I think I've heard something, this guy, Mark, he thinks he knows what he's talking about. He wants us to do a cost segregation study. Can you help me with that? And again, if your CPA does not like to meet quarterly, doesn't know what a cost segregation study is, or doesn't want to do that for you, reach out to Ron KELM, reach out to another CPA who's short-term rental friendly, who's real estate friendly. And you'll find most CPAs in these small firms are, because most CPAs in these small firms are real estate investors. They're smart because it's a great way to reduce your taxes legally, tax avoidance. It is not tax evasion, which is illegal. So, wrapping things up, the cost segregation study is going to rapidly depreciate certain aspects of your home. They use a little formula and they say, okay, a roof costs this. You have to replace that X number of times in 27 and a half years. You're going to have electrical issues. You're going to have AC units being replaced multiple times over the 27 and a half years. We're going to front load all that, and we're going to get you a bigger depreciated amount the first year, maybe a little bit more the second year. And then this way, you're not paying as much in taxes, which is the whole purpose of hiring a CPA. Remember, CPAs don't cost, they pay. Okay? It pays having a CPA that's going to save you money. So, with this video, I hope you do some more research on your own. Don't pay thousands of dollars for cost segregation. Don't go to some online place where you put in your address and 5 minutes later it spits you out a cost segregation study for $199. You don't want to get audited and get in trouble. Let your CPA do it and do it properly. All right? Now, don't forget, I was supposed to increase the price of Vacation Home Mastery from $97 to $297 January 1st, but instead I only raised it to $197. So this year, VacationHomeMastery.com is only $197, but next year it goes to $297. I've had several people purchase this course in the past month. All of them said, I should have done this a long time ago. And for the price, it is so worth it because, again, I'm going to give you every single detail you need to build a direct book site. And I'm going to give you several places you can go to market your site for free and be able to get bookings at no cost, just a couple hours of your time each month. And guess what? You're going to have those hours of time because you're going to automate every single one of your booking processes. Yep, that's what we're going to do. We're going to teach you how to automate your processes and spend your time working on your business. We're not going to have you spend your time working in your business. You're going to grow your bookings. You're going to grow your revenue. Guess what? You're going to start allowing dogs. You're going to turn on instant booking. You're going to do direct bookings, okay? You're going to get some things like business cards. And I'm going to show you how to give an elevator pitch to go ahead and hand out cards and get bookings. I'm telling you, it works. I've been doing it for 12 years, okay? Cheap little $50 or $40 business cards we get at Vistaprint. Just bring in 3 to 4 easy bookings a year. And I'm going to show you how we do that in our course. I give you a little tidbit in our free 1-minute video, but I go into the details specifically with actually how to close a booking with those cards. Thank you very much for joining us this week. Don't forget, hit like and subscribe below. And we're going to see you again next week with VRBO Outstanding and Vacation Home Mastery Help videos.